You're in the Business Insurance Zone with me, Steve Savant, national insurance columnist and financial color commentator. And on today's show, we're going to be talking about 162, not only today, but all this week. We'll talk to you about the products, the ideas, the tactics, and we're going to bring you all the materials that you're going to need to play in Section 162.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm your host, Steve Savant, and we're broadcasting live to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And with me, returning as guest and columnist and blogger extraordinaire, Ken Davis, CLU, CHFC, CFP, and CPA. Welcome to the show, Ken.
Stephen, good to see you again.
It's been a little while since we've had you on.
It has been a while, yeah.
Well, Ken's got a couple hot products out there right now. He's got some blogs and comments, and I always like people who create firestorms, because generally that's me. But now you're getting a little of the action, taking a little of the heat. Good for you, Ken.
Thanks, Steve.
And if you want to hop out there, just go out to www.producersweb.com, and yes, you should pay me for that plug, and look at Ken's articles. And of course, I have a few out there myself. Ken, we're talking about today and all this week a basic idea, because all the time I get inbound mail that say, Steve, what are some good ideas that are out there right now? And sometimes certain people, well, you and I think Section 79, it's not that hard. But
right.
People think, it's a little difficult for me, it's a little up there.
Yeah.
And I just don't know how to use insurance and annuities and qualified plans, because I'm not really ERISA, driven that much. So I always say, well, hey, how about Section 162? Because it's a basic premise, easy to understand. Why don't you give us a little introduction at this time maybe as a CFP and a CPA. I don't know, can you homogenize those two together?
They're pretty close.
Yeah, so give us a little introduction into 162 bonus.
Well, I've always liked 162. You and I talked about this way back in the late 90s, where we started focusing on this thing. 162 is really good because it's a very simple concept. And 162 sounds kind of glorified and all that kind of thing, but all it is really the code section in the Internal Revenue Code that allows for a deduction for salaries. The government says if you pay somebody in your business, you get to deduct that salary. Well, what we've done in the insurance industry is we've taken that and we allow for an employer to make premium payments to an insurance policy on behalf of a key employee. And that allows them to get a deduction as wages. Now, there is a caveat to that. It has to be reasonable compensation. If an employee is getting way beyond what is a normal kind of compensation, it may not be deductible. And companies try to avoid paying dividends, so they pay compensation. So if there's any ownership issues or whatever, that could be an issue. So anyway, generally for our show, we're just going to say it's deductible. However, as compensation, it's subject to Social Security types of taxes, and the employee has to pay income taxes on it. And we're going to be talking in the show about how we overcome the issue of the employee being taxed, but unlike the old deferred comps of old, the employer does get an immediate tax deduction for the premium payment. And then the employee will have a life insurance policy in their name. They own it. They get to set who the beneficiaries are. They get to set if it's an indexed life product, they get to choose which indexes, what the mix is. They get the statements directly to their door. And I think that's really important. Too often, I think employees don't fully understand the benefits their employer's giving them. And when the employer owns them or controls them, they don't see as much value. I find with the 162 bonuses, the employees really love it because they do own it. They feel like they control it. It feels real to them.
Well, I've seen a lot of people go to the 162 bonus as an extra on top for their rainmakers, key admin people that are really running the show, operational people that are really, without them, the company would be in trouble. So they want to do something above. They're probably doing a 401k. They're probably maybe doing an employer match. But now they want to do something a little bit extraordinary, and you can be discriminatory in this. Right,
and there's a key issue here. You have to make sure that this is only going to what is termed a top hat employee. Key employees in management positions, executive positions, officer, that type of thing, or making certain levels of money or owners. Now, this is generally designed more for the key employee and not so much the owner. The way I do it is I break it up into, you've got your rank and file employees. 401ks work great for them, okay? You get to the middle to upper ranges and executives, those people are being limited on contributions to 401ks. They're frustrated, and they want to put more money away. So 162's bonuses are perfect for that middle level. And then you can get into Section 79, as we've talked about in our prior shows, for the owners, okay, where they get to put a lot of money away potentially for themselves. So, and then there's also, we're not talking about it on the show, but there's also in that middle area is 401k lookalikes, which is a different structure altogether than what we're talking about today.
You know, so I've noticed things have really changed in our business, Ken. We used to see a kind of a yin and a yang. Oh, is it going to be 162 or deferred comp? I have not seen deferred comp that much like it used to be. Is it still out there?
Well, it is, and it is used, and it was used mostly for your public companies, major corporations. I'm sure there's different parts of the country where our agents are not in big cities with major corporations. 162 has always worked really well for the small to medium-sized businesses, which there's tons. When you look at a pyramid shape, we got all of this base down here, and perfect for small employers that want to benefit key employees. What's happened recently is a couple things. The economy shook people up. People aren't as confident these major corporations are going to be around. And if you've got deferred compensation as an employee, you're standing in line with all the other general creditors. You may not want to have your compensation deferred under that arrangement. 162, the employee owns the policy.
Day one.
We're going to be talking about situations where there are some controls by the employer later on, but nevertheless, if the company goes bankrupt, the employee gets to keep the policy.
Well, we're talking about 162 bonus, where you can use whole life, current assumption UL, indexed UL. You could even use VUL. When we come back from the break, we're going to talk about a little bit more about 162 and lay out the week for you. You're listening to the Business Insurance Zone. Remember, you can watch this show and all our shows right on our website, www.brokersalliance.com. Just hit the red on demand button and you'll be in there. And of course, remember, you can always call us for any of your quotes at 1-800-290-7226.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Companies in our business are always touting service, products, and underwriting. And we do that too. But here's the difference. Now enter the world of the elite producer with a value package that cuts us out of the pack. A BD that approves social media marketing of non-FINRA products and doesn't take an override. With the best competition desk in the industry, and for our loyal producers, a true group health plan. No one offers that. Brokers Alliance does. Well, welcome back to the Business Insurance Zone. I'm Steve Savant here with Ken Davis. We're talking about 162s, and before we get going, our standard caveat, remember, before moving forward with any of the ideas you hear on this show, always touch base with your tax consultant, and if you're FINRA licensed, always talk to your compliance department before moving forward. And remember, if you're looking for a broker-dealer, our compliance department is very, very soft on non-FINRA communication. So if you're looking for a BD, you may want to check on ours. And remember, they don't take haircuts on any of the non-FINRA products.
Wow, that's pretty cool.
And I love that because the E&O is $70 a month, and to walk in on your own domiciled state, application fee all in is right around $400. I mean, you can't beat that.
Yeah, it sounds like a great deal.
Ken, we're talking, and sorry for that. That's a commercial. You should probably hit my BD for that. When we're talking about 162, I really do like that, and I think you're right. Everybody's a little soft on deferred comp right now because we don't know if that company's going to be around, especially when you said the majority of all these small businesses, which we're relying on, by the way, to get this economy going. You know, that's kind of a concern.
Oh, it's a big deal, I think, and that's one of the reasons I've always liked the 162 bonuses with what we'll call the restrictive endorsement later on. The key is that a small employer, if you're an employee of that, you'd be nuts to have deferred comp. You know, you don't know that small company is going to be around. Even good-sized company, 100, 200 employees, things happen and fall apart. So you really don't want to be in a deferred situation. They are not a public company. You can't watch their stock go up and down. So the 162 bonus puts the control of the policy into the hands of the employee. Also has the added benefit, the new Section 409A code sections that control non-qualified deferred comp. Because the employee owns the policy, that doesn't apply in that situation. So, and here's the key thing.
So it's a non-409 event.
Right.
It's non-ERISA, right?
Well, yeah, we're going to be talking later in the show about ERISA and Department of Labor and some of the other issues and stuff like that, and I don't want to get too deep into that right now. However, yeah, basically, it's about as clean a structure as I've seen. And I like clean. We've all seen the problems that a variety of different insurance schemes have had. This has been around forever. As far as I know, there's no real litigation going on it. It's very clean. So the employee owns it. If the company, these small businesses go bankrupt, the cool thing is even if there's a restrictive endorsement where there's some control over the policy, that drops. That's immediately gone. The employee walks with the whole policy. They don't have to worry about the employer going bankrupt. That's really the key in my mind. They've played around with the old non-qualified deferred comp stuff in the past to do funny kinds of trusts and stuff, but that's always been very convoluted and stuff I like to stay away from. So what's happening is the big companies are now getting into this.
I like it. I like the portability. I mean, it's just a good thing. If you're saying, Steve, we have a giveaway on the show. Just write me, thebiz@brokersalliance.com, and I'll send you a basic one-pager on executive bonus plan, so you can kind of get it's a thumbnail sketch. Believe you me, we have a lot more elaborate documents as we get towards the end of the week. We can give you materials. Some of it's very intense, but I wanted to start the show out easy, kind of dip our toe in the water.
You know what's amazing on that point is, as I've gone through some of the different insurance carriers' websites, there is some major effort and money being put into collateral information about selling for the agent, for the client, for the employee of the client. There's just tons of information. I think I stopped counting at like 100 documents on one of the websites. And there's plenty of comparisons between 162 and non-qualified deferred comp. We would invite our listeners to contact us first. Tell us what it is they're trying to do. Let us zero in on what works the best, and then we can give them websites, documents, whatever that can get them up to speed quickly on this type of stuff, so that they don't feel so overwhelmed about all of it.
That's perfect, because if you write us at thebiz@brokersalliance.com, Ken will be able to sit down. You can chat with him, call them, 1-800-290-7226. And the reason is because he's already done this, and I don't want to be sitting there trolling carrier webs. Tell me, unless you got serious insomnia on a weekend, right?
Right.
You've already done this. And there are certain carrier material on 162 that are really great for certain scenarios. So you've already cherry-picked this.
Right, and there's independent insurance software out there that will take various insurance carriers' illustrations and will put it into a format of 162. What's cool about that is it's not dedicated to a specific product. You can use pretty much anybody's product, feed it the information in, get the output. They even have, and the other thing is legal documents. Once you make the sale, the legal documents are very simple as it relates to this particular concept, but having sample documents to give to the client's attorney, and let me stress that, these are sample documents. They're not for you to put in place. You can't act as an attorney, nor can I. And even though I'm a CPA, I won't do the tax aspect of it. That's for the advisor to the client. But anyway, these documents are there to grease the skids, to make it go through easy. And that's one of the impediments. You may have the sale made, and the client goes to their attorney or accountant. They don't know what the stuff is. They don't want to look bad, so they say no. Okay?
In fact, actually, we've had some of our advisors and producers just have Ken sometimes make that first call to the fiduciary, just to make sure, because Ken's an outside consultant, but a lot of times we need a liaison. I've called him in previous shows, the emissary or the liaison between our our insurance world, and the fiduciary market. So just think about that. I don't want you to be spooked by that. I want you to be actually encouraged that we can talk about this.
Well, one of my goals when we do that is not only to get that particular sale made, but also to make friends with the CPA so that they say, wow, this is really cool, and find other clients to refer to you.
It is. It's
That's
great.
even better, and I've had that happen.
Well, that's why we want you to encourage you to always contact the show. Listen, you can watch our show, this show, and all our shows right on www.brokersalliance.com. That's the Buzz on the Biz. We'll see you tomorrow.
The Biz is brought to you by Brokers Alliance, a national leader in insurance products, support services, and educational workshops. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.